Hello guys, welcome back to yet another video. It's been a while, but the market conditions are really changing. So I just want to do a small analysis on this instrument, which is the 101S, just to show you guys how these things are easy. You don't need to complicate anything. It's just a matter of training your eyes to see one thing, and then everything else will be okay. So without saying much, in front of me is volatility 101S on the weekly time frame, and according to the market structure that is showcasing right now, is that we are trending down. As you can see, we are in a downtrend. We are in a downtrend like that. And a downtrend is normally characterized by lower highs and lower lows. For example, we have this high over here. There's this high, and then have a lower high over here, and then this is the most recent lower high according to the market structure that is showcasing right now. So these are high, lower high, lower high. So these are healthy downtrend. And what do we do in a downtrend? We are chilling at the most recent lower high for the market to come back and mitigate there, and then we continue with the move. So right now, this move, where maybe this down move may fizzle out, in my opinion, that is somewhere around here, because right here there was a lot of demand last time the market was there, and I believe that the demand is still there. Being the weekly time frame is one of the highest time frame that we have, then that means if the market approaches there, then we might expect some buying. But as of now, we are still selling on this downtrend. Understand? So as we go down to the lower time frames, we already have the buyers of the kind of trades that we are likely to look, which are sell trades, because of whatever we are just seeing right now on the higher time frames. We normally say try as much as possible to go with the higher time frame momentum, so that you don't argue with the market. You are a passenger, you're just standing on the stage, and then when the vehicle comes, you join in and continue with the journey. You don't want to stand in front of a vehicle to stop it. I don't know if you understand what I'm saying. Okay, so on the weekly time frame, this is what we have been seeing in the market, and for the past 3 weeks, the market has been selling impulsively. So you might even delete these as because they're not of important right now. They're best data, but it's only to help us to make informed decisions. So for the past 3 weeks, the market has been selling impulsively like that. And these markets, even in terms of the phases, you can say this is an impulsive move, and then we have a correction. Impulsive move, correction. So right now, it seems you're in an impulsive move. Then we might expect a small correction, and then we continue like that. So I normally tell you that this thing is not, you don't expect it to be in a straight line the way it is maybe illustrated in some of the books that you guys have read. In the market, it has to have this volatility, because anyway, it has that. This is the market, If it was a straight line, we will know, everyone will know what to do, and that means everyone will be a billionaire right now. But because it is the market, it can't be a straight line. So those are the phases in terms of the weekly time frame. So for the past 3 weeks, we want to see what has been happening in the market. What has been the trend? We don't want to go against the trend. You know what I mean? So for the past 3 weeks, the market has been selling impulsively like that. So it is only wise for you to go down to the lower time frames and try and look an area of sufficient supply to place sell positions, because this market is selling. There is no point. I don't see any reason why one will want to buy in such a market. So when you go to the daily time frame, things are a little bit clear. You can see over here, this was a high. This was a high over here, and then we have a lower high over here. I'm going to remove this gray zone, but this gray zone, remember, it represents the activities of the last 3 weeks. So It was just for us to see what has been happening. So this was a high, a lower high, a lower high. So I'm going to remove this gray zone. So this is what has been happening for the past 3 weeks. And according to this market structure, and even in terms of the lows, we have a low over here. Then have a lower low over here. And right now, we don't know, we are not for sure, but the market might be printing another lower low before it comes back to this area of supply to continue with that move. I don't know if you're seeing sense in what I'm saying. Okay. So this is a healthy market structure, a healthy downtrend, sorry, in terms of the market structure. And in such a trend, what do? We are waiting for the most recent lower high. And then when the market comes there, we want to continue with the trend. So this is that order block in the most recent lower high in terms of the daily time frame. We our best bet in terms of this market is to wait for the market to come back somewhere around here, and you continue to ride in with to come to this most recent lower high, and then you continue to ride in with the trend as you continue down. So maybe this order block might be a little bit huge on the daily time frame. So what you do, just go down to the lower time frame on the H4. So before even go down, this is what I was saying. So you can see there is an impulsive move, correction, impulsive move, correction, impulsive move, correction, like that as you continue down. Okay. So basically right now we really want to place sell positions, you understand? So when you go to the H4 time frame, you can make your work precise like that, something like that. And then right last time the market was here, there was an impulsive sell move from there. As you can see, you can see the nature of the candles coming from that zone. It simply means, okay, let's just discuss what is happening over here. You see, for 4, 8, 16, 20, almost a day, the market was trying to go up. And then all of a sudden, this impulsive sell move from there. So what does that communicate to you as a trader? Because these candlesticks are just a form of communication. So that means the supply over here outweigh the demand. And that is why there was an impulsive sell move from there. Understand? So that means there is a lot of supply in here, supply orders that are waiting to be placed. And if the market is to retrace over there again, then we might see that sell move that might come from there. You know, it doesn't necessarily have to happen that way, but you know, you just need to trade to think logically before placing any trade. You understand? So this is that most recent lower high, even on the H4 time frame. So because you can see over here, we have this high over here, an impulsive move from there, correction, lower high, impulsive move again, correction, lower high, impulsive move. So we might want to see a correction and then an impulsive move to continue from there. So you can see, guys, the way I'm doing analysis, it's never complicated. It's never complicated. You don't need to put a lot of things on your chart. I'm basically even using this free analysis instrument on the MetaTrader 5 to do my analysis, because you don't need anything else. You just need to identify an area of sufficient supply in a downtrend to place sell position, or areas of sufficient demand in an uptrend to place buy position. So in terms of V100, I can literally remove all these other drawings, and then I remain with my gray zone because that is my area of interest right now. And then I say, if the market is to come back here for the long-term perspective of things, we might want to see to sell from this area. Okay, so that is the 101S. Maybe to analyze one more chart, maybe V10 1S, we can check on it because there's